Today we shall discuss what is penny stock, the meaning, the features. See, penny stocks are those securities which have very less value in the stock exchange. See, when you go and purchase the shares, you may be getting the shares for 1000 rupees, 2000 rupees, or even higher. But the topic today, the penny stocks, they just deal with the shares which have very less value. The value of the shares of penny stocks is very minimal, but their trading contributes to speculation even if they are low value shares, but the maximum speculation happens in this stock. Penny stocks are those stocks which are traded at a very low price. Just as I told you, the price is very low and they attract minimal pricing, very less price as compared to the other shares. They are offered by companies which have lower capitalization rates. This is a distinctive feature of the penny stocks, that only those companies whose capitalization rate is very low, they shall be issuing penny stocks. Another name for the penny stocks are the nano cap stocks, the micro cap stocks, and the small cap stocks. To mention, they are mostly illiquid. Illiquid means they are not liquid. It is very difficult to convert them into cash. Now understand two things. The price of penny stocks is very low. They are offered at a very lower price. But still, what is the characteristic feature is that they are not liquid. You cannot easily convert them into cash. The companies issuing them are relatively unpopular. The new entrant companies generally issue penny stocks and they are not at all popular. Because they are not popular, therefore the shares are not liquid. Now, if you talk about the shares of the famous ones, the Ambanis and the Adanis, they are very easily saleable. You are in need of funds and you hold Ambani Adani shares, you can easily sell them. The market value is very open for them. But in the penny stocks, the companies, because they are not popular, the companies who have issued penny stocks, they are not popular companies. Therefore, the stocks, they don't have marketable value. Their shares will not have marketable value and very difficult for you to convert them into cash. Penny stocks are usually found in lesser known stock exchanges. Unpopular stock exchanges generally hold them. The main feature is the low cost feature. They can be as low as rupees 10. Isn't it strange? One can purchase substantial amount of the particular stock with a small scale investment. They are inexpensive. Supposingly, you have rupees 1000 to invest in shares. Okay. Now, if the price of the share is rupees 500, how many shares will you be able to buy? Just 2. But in our penny stock feature, because the price of the share is as low as rupees 10, so with the same amount of investment, with the same 1000 rupees, how many shares can you purchase? You can purchase 100 shares. So this is what I'm trying to say, that you can purchase the substantial amount of that particular stock, that those shares you can buy so many because price is just 10 rupees. You get it? Supposingly now you are going to buy Cadbury's silk. Okay. With the same amount, you will be able to buy 1 Cadbury silk. And with the same amount, if you are buying 5 rupees munch, you can collect so many chocolates. Is the point clear? So similarly, with the same amount, because the amount of penny stocks is so less, you can purchase so many shares. The shares are comparatively very cheaper. One can invest in them without losing any significant portion of the investment finance. So even if you are purchasing lot many penny stock shares, this will not give you a dump in your pocket. थोड़े से money में you can purchase so many shares. Okay. Next, high returns. See, the price of that penny stock is very less, but your returns can be very high. Listen, I'm not saying the returns will be very high. I'm using the word can be. So the returns can be, cannot be high. The penny stocks can give high returns as compared to other counterparts. These stocks are issued by small and micro cap companies, and these companies have a very vast potential for growth. Now there are two things. See, uncertainty prevails everywhere. You also know, and do I also know. But in the penny stock feature, they may give you high returns. If we talk about the positivity of giving them high returns, because new companies, they have issued them, and because they are new, they have the potential to grow. Once they grow, your penny stock shares will also grow. This is the positive side of the situation. But if you look at the negative side of the situation, a new startup, a new company may not go well. If it doesn't go well, then the penny stock share value will also go down. So there are the same coin, there are both the things. You may get high returns in the penny stocks. Clear? Now the penny stocks are considered highly speculative. Why is it considered very speculative? I will explain you in the coming slide. They are very risky as well. Risky, why they are risky? Because they may or they may not. And if they go high, you can have money. But if they don't, your money value goes to zero. They have lack of liquidity. I just told you, because you cannot easily convert them into cash because they are unpopular companies. Next feature is the small number of shareholders. This is also a very extended portion of the previous line. Because they are unpopular, they are new companies, so not many shareholders will be available. Not many people will be coming forth to buy their shares. So less number of shareholders, illiquid asset. Limited disclosure of information regarding the issuing company, because the issuing company is new. You don't know it from ages. So the information also, you won't be able to gather more information regarding the growth potential, regarding the financial history, regarding the directors. You will not be able to gather much information. Somebody who pulls in new, jumps in new into the market, this will have these teething problems because you will not be able to gather information regarding that particular company. Now, unpredictable pricing. What does this mean? This means that they may or may not. They give you adequate profit. It is very unpredictable. The market for penny stocks, it can turn out to be a fortune and misfortune for some. Both ways it happens. See, if you want to sell them, they may give you higher exorbitant profits. Why will they give you profits? If that company goes well and becomes popular and it's doing good in the business, you will have you purchase them for as low as ₹5 and then you can sell them for an exorbitant rate of profit. So that is why people jump into the penny stocks of the new companies, considering it a gamble. Many a time they may be low profit or negative profit as well, both ways. Penny stocks are actually considered a hit or a miss security. If it comes out to be a hit, it is very big hit, and it can be equally likely that it is a miss. You may miss out. If the issuing company goes into a large organization, you may earn higher than the average yield of security, way higher. And vice versa can also be true. You may not earn even the average amount. Some of the penny stocks, they can be multi-bagger, 10-bagger, double bagger. It can give you multiple times of your income. If it gives you double the amount of income, it is considered a double bagger, and 10 times it is considered a 10-bagger. See, I'll give you an example. Mr. K invested 5,000 rupees in the penny stocks of X Limited, an IT startup, each unit costing 10 rupees. Very simple. 5,000 money he's invested and he's got so many shares, right? The firm did extremely well and the penny stock rose to 100 each. Now the share which the person, Mr. K, purchased for a minimal amount of ₹10, it rose up to ₹100. Now he sold 500 shares at ₹100, which gave him 50,000 rupees. He gains 10 times return. Wow. So that is considered a 10-bagger. Now if people earn 10-bagger, that is why other people also get fascinated to jump into the business of buying penny stocks. The risk involved in the penny stock is of limited information of the issuing authority, of the issuing company. The companies which issue penny stocks are generally the startups. Very little information is available as regard to their financial soundness, past performance, growth prospects. You cannot collect a lot of information about the new companies. Now comes the scams related to penny stocks. It's a very common feature that these penny stocks come over with a lot of scams. They are not uncommon in the financial history, these penny stocks scams. We can see them every now and then. The companies and the scammers. Sometimes these scammers even include the promoters. Now, those people who are scamming the whole issue, they purchase considerable amount of penny stock, which results in value inflation of the particular stock. This attracts other investors to follow the hype. Now, what happens is, please listen carefully. Now, the issuing company is issuing penny stocks, right? We will wait for the genuine investors to come. But no, here the scams take place. These companies themselves, they hire people, the scammers and promoters are also sometimes part of the scam. They will purchase one-on-one penny stock shares. Why? To influence the genuine investors to purchase. Because if you are a genuine investor, you are unaware of the game which the promoters and the scammers are playing on you. You will see that this stock recently launched has got sold out. So you will also be fascinated, lucrated offers on seeing the so much sale. You will also invest in the penny stock. Who are you? You are a genuine investor. So these people pushed you to purchase those shares. Now, the penny stock price moves as per investors' interest. It moves as per the company's interest because so many people are buying. Some of them are the scammers and others are the scrupulous, the genuine investors. When enough investors have invested, when they see that so many of genuine people also have invested in the penny stock shares, the companies and the scammers, they dump their shares. They sell them off. This leads to the immediate fall in the value. Now, when the genuine investors try to sell this, they face huge losses. So this is the meaning of the scam related to penny stocks. See, I'm not saying that all the penny stocks issued are doing scamming. No, I'm just telling you what is the meaning of the term scams which are related to the penny stocks. One can move the stock high by buying thousands of shares in the penny stock. This is what I told you in the previous slide. The scammers, they do this. This creates a spike in the price. They actually false spike. I don't mean to say that the spike is true, but the genuinity of the spike is not true. Okay, the scrupulous average investors has no clue. They are so innocent, the genuine investors. They don't know. They don't have any clue to find whether this spike is genuine or manipulated. Okay, now some of the penny stocks have potential to turn a small investment into a huge fortune. I told you it's a hit or a miss gamble. To earn huge profit in large stock, you need large capital. If you have some investment and you want to go in for normal shares, you need large capital to buy those shares. But in the penny stock, there's a distinctive feature that with small amount of capital, you can buy so many shares. Now the question important which arises is it wise enough to invest in penny stocks? This is my personal opinion, which I am going to share it with you. I don't want to hurt any company, any issuing authority. It is just a suggestion. The investors, they get fascinated by the profit margin with small investment. Why the people jump into penny stocks? Because you are allured, you are fascinated. Oh my God, with this small amount of investment, I can earn huge profits. But if you want to jump in, really, you should do intelligent gambling. You have to analyze the situation, do a decent research on the respective companies, study the market dynamics. Don't miss out on the risk-reward analysis. What is the relation between the risk involved and the reward? Look at the fundamentals. In-depth analysis, use your brain and logic. Gather information on the financial soundness, stability, and the track record of the issuing authority. You should always buy penny stock in an upward moving market. You should make more money rather than investing in sideward moving market. See, if the market is moving sideward, like as it is these days, do not invest. It's an upcoming upward moving market as it was during the early COVID times. That time, it's the best time to invest. Now, study the performance, the debt equity ratio, the profit sales data, the promoters shareholding. It's very important. Promoters shareholding, how much have they purchased? The penny stocks derive the value in coordination with the market conditions. If the market is in bull state, your stock will fetch you higher returns. I told you, Pre-COVID area, early COVID area was the time when the markets were flourishing. So many people made money from investing in those shares. That time was the best time to invest in penny stocks because the regular market condition, penny stocks also moved with the regular market. Fundamentally, you cannot analyze these stocks. The stock suddenly shoots for no fundamental reason. This is the distinctive feature, that without any reason, they may shoot up. It's a very big gamble, but it is dangerous. Penny stocks may go crazy and you can earn profits, I agree, but then you have to protect your capital also, right? You cannot blindfoldly keep on investing in these penny stocks just to wait for your fortune. One should do extensive research before doing the investment. The penny stocks, as they are prone to scams, so they are not often regulated by the national level stock exchanges. They are kept out of the purview. The stock exchanges often put these types of stocks in a separate category called trade to trade basket. No intraday share trading is allowed. What does this mean? That if you sell the shares, you have to deliver them the same day, and if you buy them, take the delivery on the same day, because you never know what is going to be the condition the next day. So the same day you have to deliver them. So here we come to the end of the article. Whatever I have spoken in today's article is just my personal opinion, which I limit to myself, and I don't want to hurt the sentiments of anybody else. Please like and subscribe to my channel. Thank you for watching. If you have any doubts, please ask me in the comment section. Stay safe, stay blessed.